Hey, hello, and welcome to our audience members joining us from across the globe. I'm Raymond Karam, the Chief Program and Development Officer here at the Arab Gulf States Institute. We're happy to have you all with us today as we host this discussion on digital transformation and economic diversification efforts in the GCC countries. The discussion, as you'll find out, will foreshadow an upcoming IMF report highlighting the positive relationship between progress in digitalization and more favorable macroeconomic and financial outcomes, as well as new analysis by the Mohammed bin Rashid School of Government that emphasizes the importance and growing role of digitalization in supporting growth and economic diversification. We have an excellent panel of experts with us. I'll introduce them very briefly here and add a link to their full bios in the chat. First, I'd like to welcome Ranby. She is the Deputy Division Chief for the Gulf Cooperation Council and Mission Chief for Qatar at the IMF. She has worked at the IMF since 2007, covering a wide range of emerging and advanced economies, including Iceland, India, Poland, and Vietnam. She has also worked extensively on reforming the IMF's lending toolkit after the global financial crisis. Also, a warm welcome to Dr. Nasser Saidi. He is the founder and president of Nasser Saidi and Associates. He previously served as the chief economist and head of external relations of Dubai International Financial Center and executive director of the Hawkama Institute for Corporate Governance between 2006 and 2012. He was the Minister of Economy and Trade and Minister of Industry in Lebanon between 1998 and 2000, and also the Vice Governor of the Central Bank of Lebanon from 1993 to 98 and 98 to 2003. Last but not least is Daniel Lee. He's an economist at the International Monetary Fund's Middle East and Central Asia Department, where he currently works on Bahrain. Since 2007, he has worked in the Korean government, United Nations, and the IMF, covering a wide range of emerging markets and developing economies. Moderating this session is my colleague Tim Callen. He's a visiting fellow at AGSI. He is a former assistant director in the Middle East and Central Asia Department at the IMF and served as the mission chief for Saudi Arabia and as the chief of the Gulf Cooperation Council Countries Division from 2012 to 2021. He was responsible for the IMF's engagement with the government of Saudi Arabia and for the institution's research and publications on the country. And he also led the IMF's research program on the GCC region. And with that, Tim, over to you.
Very good. Thank you very much for the introductions, Raymond. Welcome everybody to this webinar. And let me also welcome and thank Nasser, Ran, and Daniel for agreeing to be on the panel. I think it's a great topic, digitalization, growth and diversification. Clearly a lot of interest in this area. In the region, but also more broadly around the world. And it's great in many of the countries in the GCC have been doing very well in terms of the digitalization agenda. So I think it's an area where there is a lot to discuss. As Raymond said, if you could put any questions into the Q&A as soon as you think about them, we'll try and get to as many as we can. The running order we're going to have is first Daniel's going to give us an overview of the forthcoming IMF paper on digitalization in the GCC. Then Dr. Nasser will be giving an overview of the diversification index that he's for a number of years has been a co-author of. And also that's been expanded to include a digitalization component as well. Then after Dr. Nasser has finished, we'll then begin taking questions from the audience. So without anything further to do, I'm going to hand it over to Daniel to provide a summary of the main points in the forthcoming IMF paper. Daniel, the floor is yours.
Thank you, Tim. Let me share my screen. Good morning, good afternoon. Assalamu alaikum, Ramadan Kareem. Let me share my screen. Happy to present over the next 10-15 minutes some of the headline findings of this paper that Ron, myself, and several co-authors have worked on. Fauzan Farid, Sidra Rahman, Monica Yan Gao Rawlinson, and Tongfang Yuan. So Here's a bit of a motivation for our research. So obviously, digitalization is really, digital technologies are reshaping our world. And right now, we're all connected virtually, for instance. Um, but in the GCC, I think there's also an added significance because GCC countries have been making great strides to diversify their economies beyond the hydrocarbon sector. And in that process now, really looking at digitalization and digital technologies. So just setting targets not only in terms of how much they want to expand into the non-hydrocarbon sectors, but specifically setting targets on e-commerce, the digital infrastructure that all contributes to this digital economy's contribution to the entire GDP. Let me briefly just highlight that we used in this paper the term digital transformation because I think that's the direction we're heading. And that's a much broader term than digitization, which is the kind of when you convert the analog data and information to a digital format. That's kind of what we saw maybe like 20 years ago, 10 years ago. It's still happening. And then the next step is usually the digitalization, when you start using the digital technologies and data into your everyday business operations to automate some of the repetitive processes and so on. And then the kind of the more broader term is the digital transformation, because I think that's where we're heading. And that usually entails more of a fundamental shift in how organizations operate. And it also tends to encompass artificial intelligence and other advanced technologies that countries are starting to adopt. So there's a bit of a background. But coming back, I would like to again mention that in this paper, we try to take stock of the national visions and digital strategies, the specific targets they've set for expanding their digital economy or enhancing digital public services, or boosting their local production of ICT content. Certainly, I mean, this is something that has been evolving, unraveling even before the COVID-19 pandemic. And as we'll show, it has contributed to GCC's kind of resilience during the pandemic. But also as elsewhere in the world, we've seen also a lot more progress since the pandemic. And so we thought this was a good time to take stock of that. So I'll move. First of all, there are three parts in this paper. First, we try to take stock of where we are, progress and gaps. We spend a good amount of time there. And then also we explore what are some of the potential impacts of this digital transformation for economic growth and resilience to shocks, but also for financial inclusion and the quality of public services, which ultimately benefits, improves the welfare for the populations. And it will conclude with some policy implications. So I did flag briefly what we mean by digitalization, but again, to flag that it's a very multifaceted concept, and it cuts across many sectors. For the purpose of our discussion and analysis, we grouped them into three broad pillars. So one is the public sector, another is the financial sector, and then third, the corporate sector and the labor market, or kind of the broader digital economy would fall into the third pillar. And we can think of course, many ways in which these initiatives in e-government, for instance, affects our economies and welfare. For instance, I think we all know, but also in the Gulf, e-filing of taxes, or the digital procurement processes. These are helping, also not in terms of the fiscal operations, but also the fiscal transparency. We also find that during COVID, there was a lot of new initiatives in this area. For instance, like Bahrain already had kind of a digital citizen engagement platform launched already in 2014. but they really revamped it during COVID. And so this Tawasul platform became more user-friendly, and they also officially adopted the e-participation policy during COVID. So these are some of the initiatives that we think that they've made progress in the public sector and could also enhance not only their fiscal operations, but also just being more responsive to the citizens. In the financial sector, of course, we see digital technologies enhancing profitability of firms, also reducing transaction costs, but also potentially also contributing to financial inclusion goals. In the broader corporate sector and labor markets, this is where we have also the enablers, such as the digital infrastructure and the digital skills, where these come into effect. And we can see how adoption of digital technologies in general tends to enhance productivity because firms have, for instance, better access to their customers, and they can also optimize their businesses. And as we've seen during COVID, it also helps businesses to continue operating and also the workforce to be still connected, even when there's a severe pandemic. So the next four slides, I will focus on the stock taking. Here in the left panel, you will see the Gothic Maturity Index, and it's a composite index that we thought was fairly comprehensive and has a good coverage of countries. And as you can see, this is where notable progress has been made, especially during and since COVID pandemic. You'll see that the bar chart for the GCC as a whole increased significantly between 2020 and 22. And the pace of increase was far larger than the world average or the emerging markets average. And you can see that many GCC countries, according to this index, now are surpassing the average value for advanced economies. Of course, we do see some uneven progress across countries and across the different dimensions of government technology. For instance, we do see some room for improvement in the core government systems, for instance, in Kuwait and Oman. That's the green line on the right panel. And by core government systems, we kind of referring to kind of aspects of whole of government approach, like government cloud and interoperability frameworks within the government. We also see some room for enhanced digital citizen engagement, although as earlier noted, there has been good progress in countries like Kuwait, Bahrain, and to a lesser extent, Oman. That is the blue line on the right panel. So that includes open data, public participation platforms, and citizen kind of feedback mechanisms that we can gather. On the fintech, turning to the financial sector, this is also an area where we've seen significant growth in recent years. Saudi Arabia and UAE are today leading destinations for fintech investments and funding deals in the broader MENA region. And data shown here on the left panel from McKinsey is also corroborated by other also recent data, for instance, by the World Economic Forum, which finds that the venture capital investments in fintech firms in MENA, including GCC, continue to increase through 2023 to about 1.9 billion. And you know, we see many examples of new fintech unicorns also, including Kabi and Tamara in Saudi Arabia. Unicorns are startups valued at over $1 billion, and these are providing shopping and payment platforms and some buy now and pay later services as well. On the kind of the rightmost panel, you'll also see the digital payment uptake. Here in the past, here we're relying on the global Findex database to kind of, for the equality of treatment, we're relying on cross-country data here. And this is an area where in the past, at least, where we've seen more room for improvement. Whereas, you know, the Gulf countries are well known for their digital infrastructure and connectivity. In the past, we saw some kind of a room for increased uptake of the use when it comes to digital payments or e-commerce. But I think latest information and data show that this is an area where we are continuing to see improvements. And so, for instance, the Saudi Arabia central bank data, the latest data shows that point of sales data show that percentage of sales using mobile payments or card payments have now reached 94% in 2024. Now, in line with this rapid growth, policymakers are also actively pursuing strategies to enhance their fintech systems. So that's kind of the center panel, where we kind of try to take stock of the regulatory coverage across different dimensions. And all 6 GCC countries have their fintech regulatory sandboxes implemented, some of them quite early on. And others have also gone further, like in Bahrain has also introduced regulation and oversight on open banking, open finance, and more recently on crypto assets. And this is obviously an area where things are evolving very rapidly, and we might expect to see more also on distributed ledger technology and use of AI in the financial sector, more guidance in those areas in the coming years. Now, turning to the third pillar of the broader digital economy, as earlier hinted, there's very good connectivity in the Gulf. The Global System for Mobile Associations, they forecast that by 2030, average 5G adoption in GCC will reach 95%, far above the world average of about 54%, and much higher also than North America or developed Asia Pacific. Now, turning to the rightmost panel, we still see room for improvements in the digital industry, the industry integration of digital inputs. So this is some information we have on Saudi Arabia compared to the United States, based on the input-output tables to show how extensively firms use digital inputs like IT hardware or digital services in their production processes. And here, obviously, compared to the more frontier countries, countries at the frontier of digital technology, we see kind of room for continued improvement. But there are also, again, recent signs of local output in the region's digital innovation increasing. When you look at Qatar's number of apps being published, or the patent applications, which are still low but have tripled in the last decade from the GCC. These are some positive developments that we also highlight. Now, in the center panel, when it comes to digital skills, which is very important, we see that what we show is a survey conducted by the International Telecommunication Union on basic and advanced ICT skills. And most Gulf countries seem to fare quite well on this measure, although we see some room for improvement when it comes to more advanced ICT skills, for instance. In the report, we also look more comprehensively at international test scores on math and science, number of graduates in STEM, which could also all contribute and become a factor. And these are all important for kind of harnessing the productivity benefits coming from digital technologies, and also for narrowing the digital divide. Now, kind of pulling all this together, and especially for empirical analysis, we created this index, a composite index, to kind of take stock at the country level, work on the advancements in digital adoption. It's called the Enhanced Digital Access Index. And you can see that in the left panel, over the past 2 decades, GCC countries have really closed the gap vis-a-vis the advanced economies. On average, obviously, there are still some gaps across the different dimensions of this index. But this is, for instance, in some countries like Oman have started from a kind of a lower base. So the initial conditions were different, although they've also seen lots of progress recently. So this is something that we've used. And the IMF has also recently published the AI Preparedness Index. And that's on the right panel. And broadly with 4 components: digital infrastructure, innovation, human capital, and regulation. And we see that GCC countries as a whole are much better positioned than emerging markets as a whole. But we see some room for improvement, especially when it comes to innovation and regulation. So these are some of the areas that we highlight. In the report itself, we also have a kind of a more dedicated box on artificial intelligence. And we highlight that GCC region is moving very quickly in this area, investing a lot in related infrastructure like supercomputers and data centers. Saudi Arabia and the United Arab Emirates have adopted comprehensive AI roadmaps with the goal of becoming global leaders. And I think we're already starting to see some efforts bearing fruit. UAE, for instance, successfully has launched their open source large language models. So these are some signs that GCC countries are kind of shifting from not only being a consumers of innovation, but also producers of innovation. Some early signs there. Now, in the next 4 slides, I will share some findings from our empirical analysis. So we use the enhanced the digital access index and run many regressions. And so on the left-hand side, so we want to see how the digital adoption is affecting economic growth and resilience, but also into specific sectors like financial inclusion or government effectiveness. And here we employ a panel data set across 175 countries, dating from 2000 to 2022, although data availability really varies across the variables. And we also employ, for some regressions, country-specific and even firm-specific data, leveraging on capital IQ data on firms' balance sheets. So first on financial inclusion, on the left panel, what you see is that 1 unit increase in the enhanced digital access index, 1 unit increase is roughly the average annual improvement that GCC countries have made in recent years. And that's associated with a 0.8 percentage point improvement in financial inclusion as measured by the share of adult population with a bank account. So if you think about it, that's a fairly significant positive improvement. And using interaction terms, we also highlight in the report that some countries seem to have benefited more than the potential gains are somewhat larger for other economies, some and the Gulf. On the rightmost side, we also have return on equity, showing how the banking sector were more resilient to the global external shocks like the financial crisis and the COVID-19 pandemic. So, and this can be attributed a lot to the operational efficiencies and expanded consumer engagement that digital technologies enable them to have. Turning to the government effectiveness, here we used regressed government effectiveness index, which is published by the World Bank on not only on EDI but also the GovTech Maturity Index and some of its subcomponents. And as the left panel shows, here also we see a very strong positive association between digital adoption and the government effectiveness. And it's not surprising because governments are now using data and data sharing more effectively among government agencies, but also the citizen engagement and trust are enhanced through this new digital initiatives. And although GCC countries are already quite advanced here, we use a quantile regression to show that there are still meaningful gains from the marginal changes even for countries at fairly advanced stages. That's what the center panel shows. On the right panel, we also highlight that in the corporate sector, we see a lot of the firms in industries that are more digitally intensive really tended to be more resilient to recessions, technical recessions. The report has more explanations, but here we use alternative measures of digital intensity, for instance, intangible capital or the use of digital inputs, and so on. And you can see that on the right panel, the bar chart shows that 1 quarter after a technical recession, when you look at all GCC firms, you see a deep kind of a contraction in revenues. But for the firms in more digitally advanced sectors, industries, you see smaller dips or kind of a larger dips initially, but kind of a faster recovery over the next year or 6 quarters. Now, we also highlight here the impact on economic growth. So on the left panel, you see GDP per capita growth, really strong, associated with economic growth. So again, a 1 unit increase in the index associated with a 0.7 percentage point increase in GDP per capita. In a recent IMF literature also highlights a kind of a resilience to shocks during COVID. Higher digitalization, for instance, mitigated economic disruptions caused by the pandemic by first increasing productivity growth, but also reducing the loss of hours worked. The center panel and right panel shows we zoom in to Saudi Arabia's experience based on the authorities' own studies. So it shows that the increase in digital economy between 2017 and 2022 really seemed to have helped reduce the output loss seen during COVID. Now I'll conclude with my last slides on the policy implications. So in the priorities for further digital transformation, again, looking at these 3 areas, but they're also interlinked. So we see room for further enhancements in the digital government, but also more broadly in the role of government in terms of improving the data privacy laws and cybersecurity. We have in the report a table where we take stock of the new legislations with a brief description and with a lot of the new measures coming in place here. Also kind of having a good regulatory framework in line with the rapidly evolving digital industry. These we see as priorities in the public sector. Now in the financial sector, we see room for continued improvement in digital payments and e-commerce. Also room for more industry-led approach in the fintech development to enhance competition. And also this is another area where we highlight is a lot of improvements, not only domestic payment systems, but in the cross-border payments. And this could potentially also, along with other cooperation, such as harmonization and regulations, could really improve the market scalability of some of these fintech sectors in the Gulf. Finally, when it comes to the broader digital economy, we see room for continued improvements in digital skills and also support for SMEs, especially so that they could also adopt to new technologies. And also room for targeted investments and interventions for boosting infrastructure, industry, and innovation systems. Now, finally, here are some takeaways, my last slide. So we find that overall there's been significant progress, and on some areas now GCC is on a par or even exceeding the advanced economies in some of the areas. Also a little bit caveat on the data. Again, you know, the rapidly evolving digital landscape. So some of the cross-country data that we've used in this report are there, but GCC, some of them might have also made even further progress beyond what we show in this report. Our empirical analysis shows positive association between digital adoption and many of the goals that GCC countries have set forth. Finally, we see areas for room for improvement or continuous efforts. And we also highlight in this report the need for balancing opportunities and risks, and especially when it comes to risks and challenges concerning the labor market. Just wanted to flag there's also a lot of recent IMF research kind of looking at this in greater detail, looking at the exposure by job categories, but also the complementary to what extent countries' labor markets can also adopt to do this technology and be more complementary rather than just simply new technologies displacing labor. Thank you very much.
Good. Thank you very much, Daniel. It's very comprehensive and thought-provoking presentation. Before I hand over to Dr. Nasser, just a reminder again to please submit any questions you have through the Q&A function online. Clearly, the sooner we get the questions, the more likely we're going to be able to answer them before the end of the session. So without further ado, I hand over to you, Nasser, and please take it away. Thank you.
Thank you very much. Thank you, Tim, and thank you for organizing and inviting me to participate. Just maybe two quick reactions. This is an excellent paper, so I congratulate the fund once more on really being ahead of the curve in terms of what's happening in the region. So before I start my presentation, which I'll share in a minute, I'm going to say that we are living two big transformations, which will unfold in the next decade or 2 decades, insofar as the GCC and the rest of the region. One is the digital transformation that the IMF paper is about. And of course, digital is ubiquitous. It affects all sectors and will affect all sectors. And the same way as AI will also become ubiquitous. So that's one transformation we need to focus on, and I think the paper highlights this very well in terms of major sectors: financial sector, government, corporate. And I'll make some remarks maybe later on when you open up for Q&A, Tim. But the other major transformation which is going to be unfolding is the green transformation. And the issue, particularly for the GCC countries and the MENA region more widely, is that we're exposed to climate risk. And so climate risk mitigation policies and climate adaptation are going to be major areas. So developing the green economy is going to be a major challenge and a major transformation. So I think those two should be at the back of our mind. And they will be interlinked, because what's happening on the digital side can allow us to adapt more easily and more efficiently to climate change. So really, this is just a little bit of background before we get started. So two major transformations we have to keep in mind. So let me share my screen. Okay, so a lot of the focus here is on what was mentioned in the introduction. Already some 4 years ago, this is the 4th edition of the Economic Diversification Index that we've been publishing with the Mohammed and Rashid School of Government in the UAE and Dubai. So what I'm going to focus on is the main results from the index and how we are transforming the index to include more indicators of digitalization. And when we started off with the fact that much of our analysis of diversification across countries has mainly focused on trade diversification. But trade diversification is not enough. We developed 3 pillars of economic diversification. One is how diversified is your output? How much are you non-commodity, non-oil sector? How much are you into services, etc.? The second one, and the first one is important because we need to think always in terms of value added. Are you going towards more complexity in terms of your activities, and therefore digitalization is going to enable you to diversify your output. So we'll come back to that maybe later. The second pillar of the EDI, the Economic Diversification Index, is trade diversification. How much non-commodity, non-oil, but also are you going into trading more complex products? You have a wide variety of trade partners, because if you've just got a few trade partners and something happens to those trade partners for whatever reasons, economic or other shocks, then you will get affected in terms of your trade. So having greater trade diversification helps you overall in terms of economic diversification. The third one, and particularly important for commodity-dependent countries such as the GCC, is government revenue diversification. In many cases, most of government revenue comes from one commodity, or such as oil. And therefore, you're subject to a great deal of volatility of government revenue. So when oil prices or commodity prices are high, government revenue is high, you tend to spend more. So there's pro-cyclicality of fiscal policy, whereas normally you'd want fiscal to be contra-cyclical, right? You would want to be compensating for output fluctuations through government spending or other government policies. So diversifying your government revenue is critical component of economic diversification. So have you introduced taxation? Have you introduced corporate taxation? Have you introduced property taxation, sales, VAT, etc.? So those are important. And here again, I think what's important is that digitalization facilitates that, as the IMF paper shows, that if government uses digitalization in its services, particularly in terms of revenue, but also in terms of spending, this tends to improve government revenue diversification. There are two other elements or components of diversification. One is financial diversification. How diversified is your income? For example, you can have a very small country that has substantial commodity or revenue or oil revenue, but is simply too small really to be highly diversified in terms of output and trade. Where it can be diversified and reduce economic risk is by financial diversification, having a portfolio, for example, of investments internationally. We can't capture that in our EDI because we have not been able to get the data. The other one, which is important overall for diversification, is how diversified is your skill set and your labor market. Again, it's not easy necessarily to get the data on human capital and skills and all the rest. One interesting fact about the GCC is that they've opened up for foreign human capital to come in and skilled people to come in. And that allows them to diversify. Again, it's very difficult to diversify output or trade if you don't have the diversity of the skills in the labor force, right? So this is an important component, and we hope to integrate that in the future. So let's get on with the index itself and see how it complements a lot of the discussion in the IMF paper. So we're now into the fourth edition of the EDI. We've covered 115 countries now. We have a historical time series, all available online for anybody to look into. And we have some 27 sub-indicators in the three major components. So I'll go into that. We won't go into the detail of the construction, but the indicators are meant to capture the three pillars of diversification. And again, the main point is to reduce volatility, to reduce economic risk. And if you reduce volatility and you reduce economic risk, you encourage more investment. So that's what we want. So if you look at the IMF results, greater digitalization improves outcomes in the banking and financial sector. allows greater financial inclusion. So an important point is the reduced volatility. It's not just an impact on the growth, which you have, and per capita income, but you also reduce volatility of economic growth, which is extremely important. And so you're reducing economic uncertainty. So I think one thing that you could look at in terms of further analysis is not just the impact on growth, but also on volatility of economic growth, which is, I think, important. So here's a set of indicators. These are all available, as I mentioned, online. If you look at government revenue, we go through and collect data on excise, income taxes, goods and services, tax revenue in general, total revenue, etc., and trade revenue. So we try to capture various aspects of government revenue, various components of government revenue. This sounds trivial, but in many cases, it's actually very difficult to get the data. We've relied on the IMF and your fiscal department colleagues for a lot of that. If you look at the trade ones, you can see a number of indicators. But one of the things that we focus on, and it's important, is export product concentration, import product concentration, because the more concentrated those are, the more risky your trade becomes. And you also want to look at higher value added. You want to look at product complexity going into your trade. On the output side, you mainly want to focus on services and non-commodity, non-oil activities, high-tech, manufacturing, and related. So those are the indicators, and you'll see that many of them complement the indicators that the IMF has. Now, if you look at the paper, you've noticed, and this is generally true, COVID came in as a big shock. What I mean by that is that when COVID hit, for many of the GCC countries, they discovered that what I call economic diversification 1.0, that is going into trade, tourism, and the like, got you hit very badly. It is precisely those sectors you diversified into that got hit by COVID, trade, tourism, and the like. Everything stopped. So this came as a big shock, I think, to the policymakers across the GCC and the region. So they decided to shift policies, including to greater digitalization, okay? And we wanted to be able to incorporate it into all the components of the index. It was difficult. We simply don't have the data. And I think one thing that the IMF can do is to help the various statistical authorities across the region in terms of improving the data on digital. And remember that when we look at the digital economy, we've got four major components. One is infrastructure. So we have an idea of what the infrastructure is. The second one is the extent of e-commerce. So that's a second component. The third one is how many digital services are actually priced. You have quite a few digital services which are not priced, and therefore it's difficult to count their contribution to GDP. And remember, we always want to be able to calculate value added when we're looking at the GDP. And finally, we want to look at government digital services. How many of all government services are provided digitally? And one plea I would have is that we should disaggregate the public sector. In other words, we should look at core government, but also look at public utilities separately, as well as state-owned enterprises and government-related enterprises. If I look across the GCC, many of the public utilities have become digitalized, yeah. And it's good to capture that separately because it improves the efficiency of public services. So what we've done is we've just looked at being able to have as much data as possible. Remember, we're trying to look at a large number of countries, so 110 countries. and we've got data from 2010 to 2023 on the three indices that you have. How many services are digitally provided out of total services, ICT, goods exports, and international trade in services, digital. Now, this is important. And again, here's an idea. As the GCC countries invest much more into digital infrastructure, they can export the services of that digital infrastructure to countries that don't have the underlying digital infrastructure. Okay, just a thought. I mean, you can now trade infrastructure services, and in particular, digital infrastructure services. So here are the results. I won't spend too much time on them, but this goes over from 2010 to 2023, covers different business cycles and crises and all the rest. So if you look at the MENA region, you'll see that it's below, certainly, the high-ranking North America, Western Europe, and as well as East Asia Pacific. There has been some improvement over the past years, but again, in the MENA region, there are large gaps and discrepancies between different countries. The GCC are by far at the forefront, very true, as you point out in the paper. But there's a big digital gap, and I'll want to come back to that a bit later. On the right-hand side, you see the trade diversification sub-index of the total. And you'll notice a big jump, really, for most of the countries, except for my home country, Lebanon, because of war, violence, and other things, and lack of investment. But you see that across the board, with some variation across countries, all of them have improved their ranking by going digital. Yeah. So important, because what it means is that as you digitalize your economy, as you rightly point out in the paper, digital trade can increase much more rapidly, allowing you to diversify, creating more jobs, opening up new sectors. So overall, when we think about what we want, you want to be able to develop your digital infrastructure. It's critically important for socioeconomic development. It's not just purely economic. When you talk about financial inclusion, we're really talking about access to banking and financial services across all the population. The other two components, I think, which are extremely important, is investing in education. Here you have a wide variety in terms of educational attainment on the digital side. You point that out in the paper. But I think when we move forward, we don't want to be always on the importing side, as I think you mentioned. We want to be able to produce, because if you're not going to be a producer, you're always going to be dependent on the technology side. And therefore, you are vulnerable. We are now living chip wars, right? Look at what's happening between the United States and China, right? And it can be extended to Europe and other countries. If you become highly dependent on importing the technology and the components for your infrastructure, and you don't produce any yourself, then you're highly vulnerable, okay? So investing in education, investing in R&D, if you look at our investment across the GCC countries in R&D and innovation, is very low, very low. And therefore, if you look at total factor productivity, important, total factor productivity growth is very low. So the hope is that with digitalization, you'll be able to increase total factor productivity growth and therefore lift overall economic growth. I think that's another component we need to think of in terms of the future. So that means that you need to remove a lot of the barriers. You need to encourage much more investment in R&D, much more innovation. You need technology institutes that go beyond STEM. I mean, STEM is already, what, 15 years old? We now need to think about STEM plus AI, coding, etc. And that has to come down to elementary school. When I see what's happening in China and Asia more generally, Korea, Japan, etc., your elementary school kids are learning how to code. And that's fantastic because you're enabling them to adapt to a very changing environment. We're not there yet in the GCC, and I think we need to encourage that. And finally, I think you point out in the paper, and correctly so, you need to remove a lot of the regulatory barriers. But importantly, I think property rights. And when you talk about AI, we are in virgin territory really globally. Who owns the property rights in AI? Yep. And if I have a dispute, who educates that dispute? Which court do I go to? Do I go to some algorithm in a virtual court? I mean, these issues are yet to be decided. So this is my last slide, simply to say that we've looked at the GCC, but the GCC is not the Arab world and not certainly not the MENA countries. Only 70% of the Arab world actually used the internet in 2024. So there's a very, very large gap. And you've got to increase the availability of the infrastructure, access, etc. And here, I think one of the important points, I think, is that the GCC being ahead should aim to integrate the non-GCC countries into their digital infrastructure, and doing so, allowing those countries that cannot make the types of investments that the GCC can to benefit from a digital economy. And that could be through digital commerce, etc. So I'm an advocate of saying to the GCC countries, please include digital in your foreign aid. Help those countries build their infrastructure. For example, data centers. You mentioned that. I believe that the GCC countries, for example, have a comparative advantage in green data centers. UAE, Saudi are already investing heavily into data centers, rightly so. But what's fascinating is that the data centers can be solar power energy, use solar power energy, and that is unique. And that can give them an advantage in the AI world and into cloud computing in general. So let me just end there and thank you.
Thank you very much, Nasser. That's a great overview as well, and complements very nicely, I think, the IMF presentation. I wanted to maybe kick off with a couple of questions that I guess we'll just put to the panel broadly and just pick and choose who and how you want to answer. The first one is, we've spoken a lot about the opportunities presented by digitalization. Daniel, sort of in his conclusion, began to raise the risks as well. And I sort of just like to hear, I think, from each of you to sort of maybe expand a little bit of what you see as the key risks to the Gulf region that could come from this increasing digitalization, attempts to get more broadly into the AI data centers, etc. The second question is, I guess because of data limitations, either in the IMF case, sort of the index was, I think, went up to 2022. In case of the globalization index, I think for countries were missing from the GCC. I know as well, Daniel, in the presentation, raised a couple of areas where sort of data in Saudi Arabia shows continued progress. But I'd like to get your sense of sort of, more broadly in the GCC, how progress has gone the last few years. My own sense from having recently visited Saudi Arabia in Dubai is that progress has been pretty substantial in those 2 years. So I almost wonder whether, some of the, Saudi, UAE, maybe are they now even higher up? Have, Kuwait, Oman closed some of the gaps that are identified in the index? So both fairly broad questions. I'll leave you to pick and choose, and I guess whoever gets their mic on first, please go ahead and offer some comments in these areas. Thank you.
Thank you, Tim. If I may, I can maybe start with your first question on the potential risks associated with digitalization, AI. I want to say these are not particularly just risks for the GCC. These are just more sort of general, what could be the potential risks that should be managed as a country is advancing in digitalization and AI. I tend to think there are 3 major layers of risks. So the first layer probably is more specific to specific digital activities. So for example, if you think about fintech, CBDC, so these would have implications on financial stability, monetary policy implications, and so on. Also, another example is AI. If you want to embrace AI, there can be the issue of how to embrace AI, use AI in a more responsive and ethical way, and so on. So there are risks associated with specific digital activities that should be properly regulated. But I know it's easier said than done because it's a very delicate balancing act. On one hand, regulators want to manage risks, protect investors, customers, but on the other hand, we also don't want the regulations to be overly restrictive and stifle the innovation. We still want to promote the innovation, the ecosystem around the digital activities. So that's the first layer of risks that I see. The second one is much broader: cybersecurity, private data privacy protection, identity protection, things like that. So that is more general. That's not activity specific. That's more general to the advancement in digitalization. So I think all the GCC countries have already introduced various legislations, regulations on cybersecurity and so on. But my general sense is more can be done to further promote digital trust, for example. Because as one of Daniel's slides showed, at least up to 21, 22, where our latest cross-country data shows, the digital uptake of digital banking was kind of more limited at that point in the GCC relative to advanced economies. We know now more progress has been made, but I think a key factor is really to foster more trust in digital solutions. So those risk management and regulations in broader digital trust is important. And the third layer, I would say also, as already mentioned by Daniel and also by Nasser very nicely, is on the distributional impact or the inclusiveness from digitalization. So one broader risk is potentially on digital divide. And if we think about the labor market, there's also the issue of job displacement risks, particularly with the rise of AI. So that's why adequate social safety nets, as well as training, active labor market policies to help facilitate job transition, is particularly important. And there, I just want to, since I work on Qatar, I just want to cite a recent finding, which I find quite interesting in our recently published Qatar staff report, published in February, where we did a more in-depth analysis on the potential impact of AI on the labor market in Qatar by looking at how different job categories could be, first, how exposed those job categories are to AI, but also importantly, whether the jobs will be complemented by AI-driven productivity or are more likely to be replaced by AI. So that's where, of course, the result is country-specific, but at least for Qatar, we find that even though the overall AI exposure of its jobs is similar to an average emerging market level, but the share of jobs that are exposed to AI, but also complemented rather than being replaced by AI, that good share of AI exposure is quite high, thanks actually to the private sector in creating such jobs over the last decade. So again, this result could vary across countries, so I cannot say for the GCC as a whole, but just to say this is another important aspect that we need to think about and support. Thank you.
You want me to jump in, or Dan wants to go? Daniel? Okay, let me just, thank you. Let me just violently agree with Ran, particularly on the last bit. It has to do with the labor markets and the impact on labor markets and the like. Let's remember that in the GCC, a lot of the labor is expatriate labor. It varies, of course, a lot across the countries of the GCC. UAE is maybe close to 85–90% and higher in some sectors. So I think in terms of the impact of digitalization and particularly AI, they're going to be very different effects across the region. And I think it'll be good if the IMF looks at that more closely, particularly as you're doing your Article 4 and AI and digital economy unfolds. But I could easily see that with robotics, automation, and digital, some of the countries, particularly with high, low-skilled or medium-skilled expatriate labor, will see a large outflow of that. Second comment I would make is that government services are becoming increasingly digitalized. So in the UAE, during 2025, nearly all government services will be digital, right? I'll be able to do everything on my phone, on my mobile phone. Now, we also know that government services are predominantly run by nationals across the region. So what is the impact on that, on the employment of nationals? How do you reskill them? Where do you reorient them? How do you create jobs in the private sector? I think that is one of the risks. The other point, I think, is that if we truly believe in the digital economy and its positive impacts on growth, productivity, and the like, we should all have digital identities in order to benefit. Once you have a digital identity, you can access digital across the board, whether it's government, financial, or corporate. So here, for example, the example of Estonia comes to mind. I mean, I think they've done extremely well. And the last bit, I think, has to do with public policy. Should we have, and this is an open question, should we have industrial policy, industrial digital policy, with all its ramifications? Should this be a major component? Industrial policy now is come back in vogue. So on the green side, I'm an advocate of industrial green policies, as long as you don't go into too much protectionism. But should we be having industrial digital policies? And the final bit has to do with education. The biggest risk is that if we don't educate our people in digital the way Singapore or Finland does, or others, then we will fall back. So I think two things. We are going to need the engineers, and we need to educate those. And that has to be a massive undertaking. Otherwise, we will fall behind. I can import supercomputers, but if one particular component goes wrong in the supercomputer, what do? I need somebody to repair that. So education, I think, is going to have to be a critical one, and we need to focus much more closely on that. And the risk is very high if we don't do that.
Only actually to pick up Nasser on that last point, because I guess improving education systems in the region has been, a focus over the last 5 or 10 years. But if you look at the trends in international mathematics and science report that came out again late last year, really very little progress has been made in improving the outcomes, at least as measured by that report. And as you say, that may be in a sense yesterday, because you need to develop the skills beyond the traditional STEM looking forward. So I guess I'd be interested in everybody's just comments in terms of, sort of one, what can be done in the relatively short term to improve the skills there. But secondly, is it going to be a limit going forward? A lot of countries have big AI ambitions. Is it limiting to have a very small pool of domestic talent in these areas and having to be importing? Nasser, you've already maybe got into this a little bit, but a lot of investment is going into areas that maybe at the end of the day are not going to create a lot of national jobs. So maybe between the panel, you can call. Maybe I'll ask Nasser first, and then Ran or Daniel what IMF analysis on this may have shown. Thank you.
Okay, let me mention one positive element is that the populations of the Gulf and the nationals are very young populations, right? So if I look at Saudi Arabia, 60% are below 30 years of age. The same is practically true across the region. I mentioned that demographic fact as important because it means you can address that maybe over a generation, right? Okay, you can upskill, you can go into STEM plus, improve your PISA mathematics scores and all the rest. But what it does mean, however, is that it's not, you can create technology institutes, right? You can set them up. But in order for people to benefit from the technology institutes, you will have had to revise the curriculum at elementary and high school level before you can really benefit from technology institutes. So that's why I think you need to think of digital policy as an all-encompassing policy in government. So when I look at UAE, for example, I'm really encouraged. You have a minister of AI and you have a minister of climate change, and that's great. I mean, that's sending the right message. We need to multiply that across the GCC and across the region, simply because your digital policy affects really all sectors and all activities. How you get there, I think there are lessons from other countries. I don't want to focus too much on the European countries, but Finland, etc., the Nordic countries. But there are lots of important lessons from next door, India, Asia, Asian countries. So there, I think, is where I'd love to see more of our trade and investment policies taking into account education, yeah, and not simply trade in goods and services. So I think there are two, just to summarize in this, what worries me is that there are two types of risks in a world which is deglobalizing or fragmenting. One is you've got the chip wars and you become vulnerable to disruptions in digital goods. And the other big risk is you're not up to scratch in terms of education and the ability to adapt to a rapidly changing digital landscape. And the final thing, Tom, you mentioned quite rightly, the numbers back to 2022 probably don't take into account what I live in 2025. Really, they've improved. The infrastructure there is much better than what I see in Europe and the United States. So an advanced economy level. It's the human bit that needs to follow.
Daniel or Rand, do you want to add anything on this?
Thank you, Tim. Thank you, Nasser. Maybe let me add a few points. Fully agree on the key importance of education. Maybe let me add a few more points. Agree with everything Nasser said. A few more points. One is also, I think, a bit of a positive news that the GCC in general has a more flexible labor market in the sense that especially some of them like the UAE, Qatar, they rely more on expatriate workers. So in that way, by attracting the expats with the right skill sets, higher skilled expats, that's kind of a way to improve the overall skill level relatively more quickly over the near term. So in that sense, they're in a better position than countries that have to rely on education. I mean, domestic education, of course, very important, but will take much longer to bear fruit. So in that sense, I guess that's a kind of an advantage that the GCC, at least some of them can leverage on. A second point I want to make is the GCC economy in general is state-driven, and a lot of the nationals, actually the majority of the nationals are employed in the public sector, and that affects their choice of majors. So a lot of them actually choose majors that would ensure basically tailored for public services rather than more tailored to the private sector, STEM, AI, technology, and so on and so forth. So I think it's not only the PISA score, the overall sort of education, but also the specific majors they choose, to what extent that could facilitate a more private sector driven growth model going forward. There's that. And the third point is on the efficiency of public spending on education and R&D. So again, take Qatar as an example. Actually, Qatar spends a lot on education. If we look at public spending, education spending per student, Qatar is probably among the top. So really the government emphasizes education spending and so on. Of course, you also see gradual improvement in education outcome. But if you compare Qatar's outcome spending efficiency with other frontier, I mean, more advanced economies, at the frontier of education spending efficiency, you can see there's still a gap there that can be further improved. So the key is not only to spend more. The good news is a lot of the GCC countries do have the financial resources to invest more in education, but I think, and R&D. But I think the key is also how to improve the efficiency, how to have a more outcome-based education spending. Maybe the last point is, again, I think Nasser mentioned how to design the curriculum to meet the demand of the private sector better. And this collaboration with the private sector should be throughout the whole chain, from curriculum design to job market matching. And finally, maybe there are a lot of well-educated people, but to what extent the GCC countries can retain the talent? Because a lot of them, after they complete education in the GCC, they may go to other countries and get jobs there. So how to retain talent also is another issue. Let me stop here. Thank you.
Thanks, Ran. Let me ask a couple of the questions that have come in online, and then I think we'll wrap up. So one question is, it talks about chronic economic issues that still exist in the GCC states. And I guess one of those chronic issues has been the very poor TFP, total factor productivity growth we've seen. In fact, I think at the GCC level, probably negative TFP growth for many years. Yet, we're talking about the huge benefits that have come from digitalization, and one of those channels is clearly through, well, we think it's through productivity. So how do we wrap those two together? Huge benefits from digitalization, but still very weak productivity growth in the region. And is that something that in the next stage of digitalization we may see reverse? The second one is about data centers in the region, and I know, Nasser, you mentioned in industrial policy in I guess in digitalization, green technology maybe. So maybe a very general question, but what do you see as the environment for data centers and more broadly other sort of technology coming into the region? Is the environment there at the moment, or what more needs to be done to encourage these sorts of investments? Particularly UAE and Saudi are making. So maybe, Nasser, start with the second question to you, and then we'll end with the question.
Very quickly, look at TFP, total factor productivity, negative contribution or very low contribution, and we know some of the reasons for that. In particular, the low contribution of the private sector. I think one of the significant points is very little spending on R&D. We don't spend on R&D. There is very little innovation. And if you look at our number of patents, copyrights, etc., in the region, extremely low, not just in the GCC, it's across the whole region. So I think what you want to do there is to ask yourself, how do I protect intellectual property? How do I make it worthwhile so that it actually leads to innovation and productivity growth? Okay, 2, data centers. This is an area where I think I can be very positive. What I mean by that is I think solar data centers or green data centers can be an exportable technology. Right? We have the ability in the region, because of solar power, to establish data centers. It's already happening, but the trick is to use solar power for the data centers. And I think this is a matter also of national security. Increasingly, who controls your data and having access to your data is critical. So I need to have my own data centers, bottom line. I also need to have my own satellites and to protect them. The best way to stop activity today is to destroy your satellite, because by and large, a lot of our on-ground activities are directed now from space, from your mobile to your infrastructure, your power sector, etc. So I think part of that investment in data centers is really part of national security and protecting it. And by the same token, I think we need to have a very balanced approach in terms of where do we get the technology from, and being able to go international. So when I see DeepSeek and now Manos, a new one, that gives me hope because it's open access. If it's open access, I can have people develop it also and develop applications if it's open access. If it's proprietary and not open access, then I might fall back. So that's one point. Yeah.
Daniel, maybe I'll give you the last word for the seminar to have a go at the productivity question, maybe.
Thank you, team. If I may, yes, this is an issue that we also explored in the GCC note that was also presented earlier on last year. Indeed, yeah, there's declining TFP, total factor productivity. But we also do spot some recent improvements in labor productivity. And I think some of this could be attributable to some of the reforms, including greater ICT training and active labor market policies, as well as in education. We also kind of identified through empirical methods in that GCC note published end of last year. There's substantial upside to TFP growth coming from enhanced public sector efficiency, but also kind of more increasing private sector participation, as Ron also highlighted. So these are areas where we've also highlighted it policy-wise, but we also have some empirical analysis along these lines. I just also wanted to, if I may, just add among the risks and challenges I think labor market issues were definitely flagged, but SMEs, where a lot of people work, and in the future, especially if local employment is to move away to from more government and public to private, I think it's very important. And I think we've seen some recently some positive initiatives. For instance, leveraging data and digital technologies to increase the credit rating and reduce asymmetric information for lenders, and also facilitating their participation in government tenders through better e-platforms, and also facilitating their exports abroad. So these are areas I think where we see positive progress. And also when it comes to education, I think we want to focus on the kind of the math and science course, but also in terms of, I mean, many countries have very youthful population, and I think for them, also encouraging entrepreneurship, including through startups, and kind of the whole ecosystem to encourage that, I think is very important. 2 years ago, we had a very interesting spring meetings panel where we invited the young entrepreneurs to speak, and some of the kind of bottlenecks they experienced in their early stages. So I think more kind of engagement of young populations in government policy making, I think that's also very important. Thank you.
Excellent. Thank you. Ran, maybe the last word for you before I close.
Thank you, Tim. Thank you. I'll be very quick. On the first point on TFP, I just want to add that indeed, while we all hope digitalization can help boost TFP, but I don't think, for example, digital IPs, industrial policies by itself can do the job. I think ultimately we need to sort of first count on the broad horizontal policies we discussed a lot on education and R&D, but also business environment, as Daniel just mentioned, access to financing by SMEs, because if you want the SMEs to adopt digital solutions, they need financing to be able to do that. So I think, yes, in some cases, well-designed, targeted digital specific initiatives can be useful, but I think the broader horizontal policies are the basis for these specific digital initiatives to really work to hopefully boost TFP. And secondly, on data centers, we actually have had a lot of interesting discussions on to what extent the data centers can become the diversification pillar for the GCC, given that really there's huge investment and a rapid increase in the number of data centers in the region. Nasser mentioned about this green data centers, but I mean, that could be one area to develop. But as of now, I think the main reason why the data centers are attracted to the Gulf region is because of the relative low cost and reliable energy supply. So, I mean, it's an open question. I don't think I have an answer. But my main question is, how do we create more domestic value added surrounding the data centers? If the Gulf country's role is only to host the data center to use its abundant energy to produce data or even export data, then exporting data, in my mind, is similar to, it's just a different way of exporting hydrocarbon. So again, this is an open question. Is that true diversification, or is just hydrocarbon in a different way? So again, all these are very interesting points, but I think the key thing really is to think about how to develop an ecosystem, like the supporting services around data centers domestically in the Gulf economies, and how to get true diversification from there. Thank you.
That's a very thought-provoking question to end on, with you know, sort of maybe a future research that you can come back and present. So let me wrap up and thank everybody who's joined us online, and want to particularly thank Daniel, Nasser, and Ran for agreeing to be on the panel, providing great presentations and discussion, and I think really shedding additional light on this really important topic. With that, I'm going to close, and once again, thank you all. Bye-bye.